Hey, what's going on, everybody? It's the Stacking Kid here, and today we're going to talk about a few stocks that I'm currently buying, and we're going to start out with the stocks that I already hold that have a solid future and forward, and the stocks that I may be buying. Um, so we're going to start with the company I'm currently holding. I don't think I'll be buying more of it because it just jumped up to $50 today. A little bit about this company: it is an American-based rare earth metal mining company. They are profitable. They have great revenue growth, which is always great to see whenever a company around this. I believe I forgot the market cap is, should probably check that, but it is a mid cap company. It just struck a deal with GE for a lot of neodymium magnets. For those of you who don't know what they are, they're how electric motors work. Uh, and That factory is being built in Fort Worth, and the main goal of this company is to bring reliance on rare earth metals from China to the U.S. And obviously, they're not going to be as cheap as from China or Africa, but their goal is to just make it as cheap as possible while producing it in America. And as we see, a lot more people want to produce things in America. While you see the shortages, we just there are a lot of people who want to switch to American-based manufacturing, and this company is really in the forefront of that for rare earth metal mining, as they're the only large rare earth metal mining company. So I actually bought into this company right around $32, um, and now the company's at $50.40. A solid gain for like 3 months, but I'm going to be holding this company. I wouldn't be surprised if it dropped back down to 40. My buy range is gonna be around $40, but I think if you buy this company and hold it over the next 5 to 10 years, which is really what I'm looking to invest for, I think you'll make a decent amount of money. All right, the next stock, it will be PayPal. This is a company I've held for a very long time. I actually bought this company at $40 many years ago when I started investing. It has performed very well over the last 5 years, but over the past year, it has performed very poorly, as you can tell. So it had a few highs here, but at the end of this year, we had some very harsh tax loss harvesting for companies that weren't profitable or didn't go up over the years. So as you can see, from here to here, it had some not great earnings. It had a bad earnings report right here, I believe. If my dates are correct. And once it was there, you had all these people that bought in at the peak there, at the peak there, at the end of the year. You know, if you made gains in other stocks, you might as well sell off in your company. So I see January as a great month for stocks because all these hedge funds that sold out, for tax loss harvesting are going to start buying back in. And although this isn't one of the examples, I believe that they're going to see a lot of opportunity in small caps because small caps are very undervalued compared to their typical valuation points, and their PE ratios or their forward-looking PE ratios. I should have pulled up the chart, but they're dropping below $15. I mean, not 15. Yeah, 15. Their PE ratio of 15. Um, and every time in history when it's dropped below 15, you've seen a decent spike right after that, even when it's not associated with a recession or during COVID. So that's something to look out for. And as you can see, PayPal just took a huge dip, and overall, PayPal is a solid company. I mean, think about all the transactions that even people, I'm sure most people watching this are silver stackers, and I'm sure most of you do many of your transactions through PayPal. But what is a small problem with PayPal is their competitor Square, because Square with their new Cash App, um, I see many of my friends among the youths are no, most of my friends have Cash App, and it's a huge growing platform, which brings me to my next stock, which is a stock I no longer own, but I bought into it at $25. Let's pull up whatever. Anyway, which is a stock I bought into at $25 around the same time I bought into PayPal, and I actually sold it at $140 right near the beginning of the pandemic, right after it shot back up after the first dip, to buy Tapestry and Cake and Cheesecake Factory, which is my previous video. If y'all would like to check that out and see how my stocks ever performed, well, I mean, back then it was easy money, but so Square right now, at this point, I'm looking to buy back into it. I think anything under $160 is a steal on Square. because even if you were to make the argument that in the case of another pandemic, their their payment processing, their point of service sales may not be doing as well, right? But now that they have Cash App, which is just going to be a revenue beast over the coming years, so that's something to look forward to with Square, and I think it is at a steal right now at $156. I will soon be buying more shares. I actually haven't bought back into it yet, but it's one of those companies that I most definitely will. So my next section is going to be other POS systems, and if y'all can't tell, well, I don't know why I said anyway. Yeah, this one's another point of service, and this is Lightspeed Commerce. So they are a point of service business, and you see the same fate with this company as many other companies. You saw over the past year, it had a great year. You know, all these people buying in, but as soon as buying pressures fall out, you have a sell off. Maybe the revenue wasn't good. I actually don't know what caused that, but it's probably just people selling out from a insane rise, and had a huge drop off, and then it got hit again. It's like the 1-2 punch with the tax loss harvesting here after it's negative for the people who have bought in up here. So this is a point of service unit, and this is one of the this is, I believe, the uh one of the highest rated point of service point of sales just POS systems, right? For the usability and things like that. I just see good reviews for it all over the place. And this company is at actually a pretty a pretty darn good valuation. You pull up this right here. So if we look at Lightspeed Commerce, right? Um, yeah, let's pull this up. So their revenue right now, not the revenue, their market cap is 5.9 billion USD, even though you may see it in CAD whenever you look, you got to switch to USD. And so I like to divide that by their total number of merchants, which is 21,000. And they actually charge more per sale than Toast, but that's because of the ease of use and as well as the customizability and the customer service that it allows you to have. So divide by 21,000, meaning that each one of their merchants is approximately worth 28,100, sorry, 28, 280,000, right? 281,000, which is may sound like a lot of money for each merchant because there's going to be a lot of small time merchants, but drag that out over 15 years, which is what they at least hope to get out of their customers, and that becomes a much more reasonable valuation for their company, right? As well as their insane revenue growth, which is growing at absurd numbers, as you can see. They are still not profitable, and that's going to be kind of a theme over the next few stocks I'm going to be showing. As for their competitor, one of their competitors, which is Toast, right? And Toast has been in the same space, just poor performing over the past year. And but Toast is at, in my opinion, a worse valuation because you see here's their market cap, right? And that's their total number of users. Although they are larger than Lightspeed Commerce, they have they are at a worse valuation, 389,000, right? Which is a lot higher than 281,000. So I would like to see this company, and I don't know if it will fall another 30%, but I'd like to see it fall at least 20% before I consider buying it. So I'm going to put a price target right around, I'm going to put a price target right around like, I don't know, like $24, 25. If it hits 24, 25, that's a that's going to be a buy for me. Exit out of this. We already talked about Toast. So now let's go into the stocks that, for those of you who watch a channel Financial Education, you'll already know a lot about these stocks. So actually, I'll admit I learned these stocks from Financial Education, but of course I always do my own research. And while looking at Tattooed Chef, they not only have insane revenue growth, although not profitable yet, it is a industry that has great profits. They are growing insanely fast. They're getting SKUs in Target at insane levels, right? I mean, last time I went to a Target, even down here in Texas, right, where it hasn't even reached Costco yet, even though they have a deal with Costco. It has just been insane how fast they've grown, and they have so many deals with so many stores. I think they before the end of last quarter, they made a deal with Kroger, so that revenue is going to help boost their next revenue. And so, as soon as this company has great revenue. It is heavily shorted. It is like 36% short interest. As soon as it has a solid earnings report, which I don't care if it's not for a while, because I'm going to keep buying into the company, um, it will just literally. I don't really care for the shoot the moon. I care for over the next 10 years, right? But I believe that it could easily have a solid short squeeze. And the next company, this is actually going to be the second to last. I got to pull up one more company, is going to be Honest. So this is another company, the financial education stock that he talks about a lot. And this company out, which it really doesn't make sense why this company has fallen so hard. I mean, I understand the more recent tax loss harvesting, but this doesn't make sense. It's just you have a company that kind of had some hype bought into it because it is an affordable, high quality natural products, right, for cleaning supplies, baby products, right? It's called the Honest Company for that reason, and yeah, they have great revenue growth. Profitability is going to be in the future for this company. It's right around a $700 million market cap. I could see it growing to a $5 billion market cap easily for this company. The industry is there, um, and yeah, I mean, this company at $7.80 is really a steal, in my opinion. Anything under $9, this company is a great price. Even higher than that, really. But it just has to find a solid shareholder base. Oh yeah, and something about Tattooed Chef is that Tattooed Chef reminds me of like not the company itself, but the shareholder base reminds me of like the shareholders of Tesla. They just won't sell because they believe in the company long term, right? It's got like a cult following. So final stock, I forgot to include this one, is Palantir. So this one was one of those meme stocks. I mean, it had insane growth. Here, let me pull this up over here so we can pull up a larger chart. So right, you had this company which it was a what was it? It was a SPAC, special purpose acquisition company, and then it literally shot to the moon. I mean, look at that, like 250%. That's insane over like a year, right? And then you had all these people who bought in here, and so this first drop here, tax loss harvesting, which started in October, and yet another one, which was another round that we saw among all the small cap companies. But this company really focuses on data processing for and plugging in the data for their algorithms and things like that. And they have contracts with the government and private sector, and so at a $36 billion market cap, the company is, I mean, it has a lot of opportunities in the future to grow. And this one is kind of a risky play, but I think $18 is more than a fair price. And I bought in at 20. I've already lost 10%, but I'm gonna start buying more of this company because I think it's such a good deal at a $36 billion market cap. Let's just take a look at their revenue real quick. I mean, the revenue, 35% revenue growth for a company this big, as well as their net income going up, which is always something good to see. I mean, look at their net income back there. They're really closing in a lot of space, and once they become profitable, it I mean, I hate to say it like this, but the company could literally shoot to the moon. I mean, I could see $40 easily over the next year. That's not really what I'm looking for. I'm looking to continue my account, continue averaging 30 to 40% every year, which is kind of hard to do, but it's a matter of finding the right stocks, right? So anyway, I want to thank y'all for watching this video. Hope you enjoyed this video. Remember, I'm not a financial advisor. Of course, do your own research and don't take your advice from a 15-year-old on the internet. This is just to talk about some stocks that I'm interested in, some stocks that I'm buying, and part of the reasoning about buying. If y'all want an in-depth video about any of these companies, because it wasn't very in-depth, it doesn't show my full bullish thesis on these companies. If y'all are ever interested in them, just let me know in the comment section down below, and let me know about any stocks y'all are interested in, because it's always interesting to see what the silver community and the coin community are interested in when it comes to stocks, because it's always mining companies. Anyway, have a good one, everybody.